Hey YouTube, this is a weekly chart of the dollar against the yen. This is a bearish formation that happened on September 2nd, 2017, and this week began trading on August 26, 2017. This candlestick completely engulfed the prior real body and also engulfed the topping, or I should say bottoming formation. So price engulfed both of those points and it was a downtrend. So on the 1 hour chart, you have a gap that happened on Sunday night. I was short of the pair. I wanted to be short a lot longer, and I'm reflecting on my journal. I have a journal where I write down what I did right, what I did wrong, and how I can improve in the trades that I take. So this complete move down was 250 points. I was only able to extract profits on the swings downward that were 60 or 70 points in magnitude. The pattern of this kind of trade is one where they're selling the rips. So every possible chance when price is going up in a downtrend, it's very shortable. So this is important now because there's a possible trend change going on in the Aussie against the US dollar. This is a weekly chart of the Aussie dollar, and I want to point out two key turning points. One was in January of 2015, the other one was in May of 2015 as well. So you have in this situation a rally attempt where there's a very long bottoming formation and a topping tail that is somewhat modest in size. But the key point is that the follow through happened with some strength. So they were able to drive it down. The strength of this move is, very powerful. Let's measure it. You can see how it went down 359 points in its entire range. The following week was another bearish week too. So you have a break of the open, also a break of the bottoming tail, and a total follow through. The next week it was a very similar type of pattern. Then you have in May of 2015 where there was a rally attempt. It got stopped at 81,583 right there, and then it completely engulfed this real body, and it also engulfed the bottoming tail formation. The range of this move is 226. The range here is 198. So you have another topping tail formation happen right here, and this was the entry of my short. On the daily chart, you have a shooting star. Also, this line right here denotes where it opened as well. So if you take a look at how price acted in the past, and you took this topping tail formation and all these other bearish candles that all clustered around here, and you extrapolate it, and you place the location of a trade entry right here to short here, you can see that if price acts the same way and the trend line holds, then there's some possibility of it going to 78 or 78.50 right there. And this zone is very important because price traded up, it consolidated before coiling and going back up again, and it retreated back to the same price point. They have some memory, and now it's starting to flame out a little, but I'm open-minded to almost anything because the dollar is so weak. So this is what it looks like on the hourly. I have a location of my first stop. I was taken out of half the position right here, so this pain wasn't too bad. I was only out of the money by 44 pips, but because it's moving so quickly, I was able to recover, and now I'm in the money where it's just above 80, and now it's going lower. So every 10 to 15 pips, you can eyeball some good points of entry where you're selling some of the rips, and you're also taking out portions of the trade as it progressively goes lower. Also, the dollar is very weak, and there's just this one sign of a bottoming tail. If we zoom in and look at it from a different perspective, it's starting to recover ever so slightly, and then compare that to the 1 hour chart and 4 hour chart. It's showing some early signs of recovery, but there really needs to be some confirmation. And so that is the logic I have for this type of trade in the Aussie against the US dollar. There's a big hurricane that's hitting a majority of Florida, so I hope everybody is okay over there. Trade well, everybody, and take care.